if you're a host right now and you're running low occupancies, there are a few things you can do, right? Like if my projection is that out of the next month, I'm going to book 10 days out of 30, maybe there is some point to giving a deeper sort of weekly or monthly discount. And it's okay if they come at a cheaper rate. If your occupancy is going to be 30%, you can give a 40% discount and still make more money from that booking than by waiting for those 10 short nights to book.
This is episode number 70 of the Short-Term Rental Success Stories podcast. Are you an investor that's looking to have your home professionally managed? Go to cohostit.com for more information. Welcome back to Short-Term Rental Success Stories. I'm your host, Julian Sage. This is a show where I talk to hosts about their journeys in starting and growing their short-term rental business. My goal is that you'll be able to walk away with practical information that'll help you become a better host and learn how to scale your business. Like any exceptional host, we all strive for 5-star reviews, so please go on over to iTunes and let us know what you enjoy, as it really helps support the show. If you haven't done so already, go on over to our Facebook group, The Host Nation, to connect with the community. Hey, what is going on, Host Nation? I am super excited to be back again with you this week. I find it hard to believe that we have now done 70 different interviews on this show with professionals in the Airbnb and short-term rental space. That's 70 weeks, guys, and that's not counting the Vacation Rental Machine podcast, which has over 80-something episodes. Crazy how much things have changed in just a year and a few months. This show has really just been my guiding focus, and it's kept me really focused in on what it is that I want to do. And being a short-term rental operator, being a person that is in the short-term rental space, without this podcast keeping me in line and keeping me focused every single week on just providing content and growing the business, really things can change very quickly. I felt that last year things were going a little bit slow and that I wasn't hitting my stride. And then, like many of you guys, that got started maybe towards the end of last year, moving into the beginning of this year, then COVID hit. And I've been talking to a lot of the community recently and just hearing their stories about where they are in their businesses. COVID-19 has threw a wrench in a lot of people's plans for 2020, but that does not mean that you don't have the opportunity or the chance to be able to really start growing your business. In this episode, when I'm talking with Anurag Verma, who is the co-founder of Pricelabs, a pricing tool that helps you to be able to better optimize your pricing. They are a dynamic pricing tool. They're able to pull a lot of data and information and actually able to look and see, how are people actually pricing their properties throughout the world. One of the unique things in this episode is just the difference in how different markets are responding. Some markets are doing really, really well and others are not doing so well. But there's opportunity if you look for it. And one of the things that I actually wanted to share, because short-term rental success stories was a way for me to be able to, share and find out what other people are doing. But it was also a way that I wanted to be able to share my journey of being a short-term rental entrepreneur. For those of you that don't know, I actually met my business partner, John Bell, through this podcast. I believe he was actually episode number 17 of the Success Stories podcast. And towards the end of last year, we decided to create a management company. Just as we were getting ready to really start scaling that business, things really started to turn when COVID-19 happened back in March. And that kind of, I felt like, put a wrench in our plan as well as many others. But we were constantly trying to stay focused and positive, and we were able to find opportunities where other people might not have been looking. We've been actually able to scale our business and are taking on over 9 properties at the moment in the Miami area. Being able to work with investors and finding properties and managing them for them, it's really just something super exciting. This is a really big game changer for our management company, but also just for me. Prior to this, I had a couple properties that I was managing myself, but growing this company and figuring out some of the trials and tribulations of actually starting a management company, working with investors, finding properties, all of these different aspects, taking in the rental arbitrage or master lease investing, as well as co-hosting, all of these different aspects are really trying to show that all of these different models can work. There's a time and a place for co-hosting and management and master lease or rental arbitrage and buy and holds. But it's so awesome to be able to help people along their journeys of becoming a short-term rental entrepreneur, as well as helping others take the burden off of their hands from managing their properties or helping them acquire their first properties. It's something that I am really passionate about. And if you're actually interested in working with John and I and helping you acquire your first property, or whether you have properties and you'd like us to be able to help you manage them professionally, go to cohostit.com for more information. This interview is really applicable for anybody that is interested in getting into the short-term rental space and maybe kind of hesitant because of all of the uncertainty right now. One of the things that really puts me to ease is being able to look at numbers and figures and really just kind of have something to rely on. Because if you don't know, how much a property is able to bring in, what are people able to charge, what are the comparables, all of these different factors, you really can't make an educated decision. I know firsthand about making poor decisions, like when I got my first property, thinking that I could just start short-term renting it, but realizing that the regulations were not in place. Having that framework, having that market research, that foundation to be able to lean on is so important, which is why I'm really excited to be able to speak with Anurag Verma from Pricelabs. If you like my show notes for this episode, go to shorttermsage.com/STR70. Or if you like my show notes sent directly to your inbox every week, then go to shorttermsage.com/show notes. With all that being said, on to this week's conversation. Hey, welcome back, Host Nation, to another episode of Short-Term Mental Success Stories. In this episode, I have the special honor of speaking with Anurag Verma. Anurag, if you please introduce yourself to the Host Nation and let them know who you are and what inspired you to get into short-term rentals.
Sounds good. Thanks, Julian, for having me on the show. I'm Anurag, one of the co-founders at Pricelabs. Pricelabs is a revenue management, dynamic pricing, and dynamic minimum stay solutions provider for the short-term rental industry. We started in 2015. Actually, 2014 is when we started building the product. Started in 2015. Back then, one of my good friends was studying, doing his MBA, and he was hosting his roommate's room on Airbnb. And at that time, I was working at United Airlines building pricing and revenue management models there. So we got chatting about how on Airbnb, like nothing existed back then for anybody to know how to charge, how to fluctuate rates for events, seasons, etc. So we thought about it, figured out what needs to be done, and started building stuff. And it's been 5 or 6 years of continuous building and continuous improving. But yeah, it's been a good journey figuring out what other hosts want as well, and not just from a pricing perspective, but in a lot of these pricing things also matter in operational things, right? So just learning from everyone of what to build next. That's going to be useful for all our customers. It's been quite an experience. Happy to be on the show. Yeah.
So you said that you were actually working as a data analyst prior to starting Pricelabs?
Right. Yeah. So this was at United Airlines. So United Airlines has its own internal revenue management systems, and airlines were one of the sort of first industry to build these systems, right? So it's not like it was a completely new setup, but every few years, like all airlines go through this, technology increases, like the capabilities of technology go up so much that every few years, like new things become possible. So yeah, like it was all about trying to figure out how to use the technology, the data that we have to improve our pricing strategy.
So with these pricing strategies, what's the difference from like how United Airlines uses their dynamic pricing versus like how a hotel adjusts their pricing, and how does that relate to short-term rentals and the hospitality world?
That's a really good question. So airlines are, if you think about it, airlines are super consolidated in some ways. Like for example, in the US, there are 4 major airlines. And then there are smaller airlines, but in a lot of markets, all 4 don't compete against each other directly. In a lot of markets, it's 1 or 2 major airlines that have most of the market, right? Which means they have a lot of pricing power in some ways. Of course, there is some competition. Like you might not have a direct flight, and you might have connecting, so there is that part. But if somebody wants to get a direct flight, like the options are going to be few. So they are really able to figure out, okay, I have these many seats to sell for this flight in future. How much do I expect to sell at a certain price point based on history, and then figure it out. Hotels are slightly different in that there is a lot more competition. Within any area, within most areas, especially if you're in a city, there are going to be a ton of hotels. They do segment a little bit, like by like what kind of services they offer, and whether it's a 4-star, 5-star, and all that stuff. But even then, like there is plenty of competition around, but you still have big enough number of units to sell. So like a big hotel in a city will have 200, 500 rooms, right? And on a certain night, 6 months out, If a big event comes up and you sell 20 units, whereas you usually would sell only 5 units that far out, you kind of know that something must be going on. And you're like, hey, given that it's selling so much, let me increase prices for those dates. That's called pacing in the hotel industry, which hotels can do because they have the remaining 475 units still left to sell. So they can bump up the prices and still make something. They still have to be cognizant that, hey, there are other hotels around that can do something. And it might be like 5 hotels, 10 hotels around, right? Short-term rentals is just so different from either of these two cases, because one, if you're an individual host, you only have one unit. If there's a big event coming up, you don't have the luxury of, hey, I sold one home and now I know there's demand there, so I can bump up the prices. You can't, because you already sold it, right? And then the other part here for individual hosts, especially, or even smaller companies, smaller property management companies, is that hotels and airlines have a ton of their own data. So like, they have been collecting data for many years. They have data from selling 500 of the units of the same thing every single night. Whereas on Airbnb, for example, you're selling one night every night, up to one night. Sometimes you don't sell it, right? So it's very hard to know what kind of trends exist because your data is not as rich. So yeah, all of this sort of helped us figure out, okay, like if individually it's going to be hard to do for any one host, which means somebody else will have to collect data across many properties to see what kind of trends exist in the area. And if two properties get booked very far out, then that's a sign that the other properties could raise prices and things like that. So uh, there are subtle differences in how the competition landscape is between all three. How much competition there is, like short-term rentals, there is a ton of competition, right? So if you have in an airline, if you have 10 seats left, you have 100-seater plane and you're sold 90 and you have 10 seats left and you're one day out, you're departing tomorrow, you can choose to either sell really cheap seats and fill up all 10. So you can sell for $20 and maybe you'll get enough people who will say, hey, I'll go last minute, sure. Or you can say, hey, I know there are going to be business travelers who really need to get to this meeting, who would pay $1,000. And I'm going to make more money by selling one seat at $1,000 than by selling 10 seats at $25. In short-term rentals, it's not that way, unfortunately, because if you have 10 homes left, each home is individually owned by different people. Somebody might say, hey, let's try and get that one person who is willing to book for cheap, for expensive. But then because there is competition, or perfect competition in some ways, somebody else will say, hey, I'll drop rate 10% below and I'll try to get that person. And then you sort of get into the spiral. So yeah, it's very different in what kind of strategies work. But a lot of ideas from there can be borrowed in here, as in how to aggregate data across to figure out what trends exist in the area, right?
So you're saying because of short-term rentals as opposed to hotels, you're able to tell a better painting of the market trends because people are booking individual units as opposed to a hotel and how they fill occupancy?
So not really. So I'm saying, if you were managing a hotel, you yourself have so many rooms to sell that you can figure out trends very easily just by looking at your own internal data. But if you're on Airbnb, because you only have one home, if you're an individual host, or even if you're a manager who has 10 homes, or 20 homes, you don't have 500. So like, your own internal data is not going to be as rich to figure out how the market truly behaves. Whereas for hotels and airlines, it's much easier to do because they have a much larger market share in some ways.
Got it. Which is why having a dynamic pricing tool like Pricelabs is so important, because hotels, they already have this rich data that they can go back on and they can see future trends based off of how their property is filling up. But as an individual host, you don't know how to exactly price your property unless you're looking at everybody else in the market and how they're booking.
Right. And that's not to say you don't know. A lot of hosts that work with us do know like how their market behaves. In some cases, they are property managers who have 100 properties in a small town. Like they know their market really well. But even then, just executing those strategies might be too cumbersome, right? Like, that there's an event coming up and you know that you should raise prices. but to go into 100 calendars and individually change that is itself is quite the task. So yeah, it's a balance of like I mean, I guess I'm talking about us. Like, it's a balance of providing information that you would otherwise not have, and also providing you the convenience of like being able to execute these strategies faster.
So you were working on, you came from this data background, working with United.
Right.
Your friend was hosting. You said, hey, I see that there's this opportunity there. But during this time, was there, because right now we have like a lot of other dynamic pricing tools in the
Right.
space.
Yeah.
Are you guys all basically kind of doing the same thing, or is there like a big difference? Because like, a lot of people, it's like they hear about like Beyond Pricing or
Right.
Wheelhouse,
Yeah.
Pricelabs. It's like, how do you know which one to choose or who to go with?
Right. Yeah. So absolutely. So when we started in 2014, when we started working on it in 2014, there was we did our market research and pretty much found nothing. The I think the month, it was probably August 2014 or something like that, the month where we launched like the beta for our product. I think 2 other products launched that month. And we were like, okay, everybody had the same thought at the same time. This is pretty cool. And Beyond Pricing was one of them. And then there was one called Everbooked. Yeah. So like, we all tried to attack the same problem. We at this point, there are a lot of similarities, but there are some subtle differences. I think we generally have gone the route of, okay, we do know a lot of data, we do know a lot of things, but we also want to empower each individual user to make their own like special settings or customizations. Like, we want them to be able to say, hey, I know this works for most people, but for me, I want this special something else, and they should be able to execute that strategy itself. So yeah, I mean, there are subtle differences between all the different providers, and there are a lot of similarities between them as well, right, and how they work. So yeah.
And with that, because you said that you guys were coming out before, you guys all kind of sprouted out at the
Yeah.
same time. Were was the insights that you were putting into this unique, or like was the way that you were looking, having that experience as a data scientist with the airline side? I'm not sure that I haven't talked to the guys from Beyond Pricing or Wheelhouse yet, but if they were more like on the hotel side, but like,
Right.
is there, because you had a different experience, that it's able to help with Pricelabs?
Possibly. I think their experience was more on the hotel side, and we got in a little more from the airline side, and then studied up how hotels work as well, because it was a parallel industry as well, right? So it could have possibly played a role, but then a lot of the general revenue management principles are fairly steady across these industries, right? So that will play some role, but not too much. Like, eventually, like there is. It then becomes more about product philosophy in some ways, like how you want your users to use your product. Yeah, and on that front, we generally cater more to sort of power users who want uh, who want automation and dynamic pricing, but they also want some amount of control, because they know, um, for all kinds of reasons, they sometimes know what their market is, or sometimes uh, they they are property managers where the owners specify certain restrictions on what can be done, what can't be done, and things like that, right? So yeah, so our philosophy generally tends to be more on like empowering professional managers side of it.
Yeah, it's pretty interesting, because like I got started with, I think first just hearing about like Beyond Pricing, then I eventually moved over to Wheelhouse. But my partner, John, he's a Pricelabs user himself,
Right.
and
Yeah.
I would consider him like a power user. Like, he's a very IT focused. He likes, having control of every single little aspect
Right.
and
Yeah.
knowing exactly, which properties are doing what and how they're adjusting.
Right.
So I think that there's different entry points, and I think Pricelabs is kind of like what you said. It's for the people
Right.
that want more control. And you guys are pulling a lot of data, a lot of information, and one of the reasons why I wanted to get you on was because of like this data that we're seeing. Data. Where do you see like data for short-term rental operators? Because in the hotel and airline space, like they're very, you were a data scientist, but I'm not a data scientist.
Yeah, yeah.
I'm just a guy that lives in my basement, and now it's like, okay, now
Yes.
I've got a business, and
Yeah,
so how does data play for someone like me who
yeah.
is trying to make, maybe smart moves with how, like,
Right.
I operate my properties or how I move forward acquiring more properties?
Yeah, yeah. No, so that's I mean, that's been one of our sort of challenges and thought process in building any of this out, right? Like we want to build stuff that's super useful and super advanced, but we also want to make sure that it's it doesn't take like a degree to try and figure out how to use it, right? Or even when showing data, for example, it needs to be presented in a way that you can take a look at it and try to get the main message, or if there is something actionable there, to be able to figure out, okay, what if I were to change something in my strategy, what should that be? So yeah, I mean that's a hard question to answer, but yeah, it's a challenge. Pretty much, I think that every business probably, I mean, you probably run into this as well with, I mean, your customers are your guests. You want every one of them to have the best possible experience, but then at what point, if you keep providing more and more amenities, at what point does it become like, okay, this house is too cluttered, for example, right? Like for me to figure out or find peace here.
Right.
uh, so it's kind of that kind of a situation for pretty much every service at this point. Yeah.
Do you think, because you're saying, like, in the airline space, there's only a few major players, and those major players really shift the price, kind of set the price, because
Right. Yeah.
the hotel industry has kind of been set the way that it is, more in the urban, suburban areas,
Right.
as opposed to the vacation rental side. Now we're moving into a new era of, residential operators kind of coming in the same turf as
Right.
the hotels. Have you, because the hotels have been, kind of competing with each other on price, and now we have short-term rental operators who are coming in and
Right.
competing. How does that mean that the price just is ultimately, as more people come in, that the price is just going to keep on going down? Like, how does that work?
So yeah, I mean, it's all a play of demand and supply, right? Like even in the places where there's plenty of supply, we see that when there's a big event coming up, prices can go 3 to 4 times, which means when there is a shortage, prices will naturally go up. Hotels generally, I mean, hotels ADR has probably been reducing. I think I've seen enough data around it that it has been reducing over the years, just because there is more competition for them. As much as you say that, hey, it's in purely vacation areas, you can say that it's a different segment almost. Like a lot of people booking vacation rentals uh, in a beach town in Florida are probably booking a 5-bedroom place for like their extended family. Whereas if you're booking a hotel room, it's probably a couple of folks or a business traveler or things like that, right? But especially in cities, it's almost completely replaceable. Like you could book a hotel or you could book a short-term rental. And in many cases, short-term rentals provide that something extra that some people might. So it's almost like a one-way street. There are people who would book. There are a lot more people who would prefer to book a short-term rental than people who would prefer to book a hotel, which means there is going to be some demand being taken away from hotels, which means their prices will go down. But then again, like hotels rely a lot not on individual travelers, but also on large groups, conferences and events within their hotel. So like they get a ton of their revenue from those things. uh, so there is impact, but maybe not as much. I mean, there of course will be impact, but they're still able to maintain things through their larger events or conferences and things like that.
The future of short-term rentals, because really there's this new golden era of people that are looking at residential properties or apartments and saying, if it's by a convention center, I know that the hotels do well, so I'm going to
Right.
look for properties by a convention center.
Yeah.
Obviously, there's going to come a point, hotel industry, I think they're bringing in like $830 billion. They bring in a lot.
Right.
So, taking away that market segment from them, and less hotels may be more inclined to come up, to develop, because there's more short-term rental operators. it's very easy for a guy like me to go out and find an apartment or purchase a property by a convention center. Then and a bunch of people might do that. So when I guess when does it come to that point where it's like the price it's going to drop ultimately, or the price is going to drop and the hotels are maybe stop developing? Is there like a tipping point, like when it's like it's not a profitable business?
Yeah, that's a hard question to answer. I'm sure they have their own financial models of like what they project earnings to be, and how much makes sense to still go and develop versus like, hey, if average prices drop more than this much. And that's also so fluid with a lot of regulations around the world, right? Like different cities have different regulations coming up. Uh, and you can make a decision now based on how many short-term rentals there are right now, but then maybe 6 months from now, the city does something and short-term rentals are not allowed. Like in Amsterdam now, in certain like central areas, short-term rentals are not allowed. So if you did an analysis 6 months back and decided, hey, we won't build a hotel here, uh, now you might say, okay, maybe it makes sense to build a hotel here, right? So it's going to be a case by case thing, city by city thing, and uh, it's also, I think Marriott has for the last year and a half been getting slowly creeping into short-term rentals as well, right? So it's going to go both ways. Like some short-term rentals will say, some hotels will say, if this is being a profitable business, we'll go there. Why not? And then the same way, a lot of short-term rental operators now almost work like hotel, like Sonder does that, Domio does that. There are a few of those, right, where uh, they uh, they are essentially a hotel, but with every room like a home in some ways. So yeah, I mean, the more this becomes mainstream, the more like those two industries might collide. Where it won't collide is still like uh, like
Vacation
truly
destinations.
vacation destinations where like there are just no large buildings,
Right.
essentially. Even in vacation destinations, there's a lot of timeshares and condos, buildings that are short-term rentals. So even there, some of this does happen. There are, in fact, there are resorts where they have a building full of hotel rooms, but they also have short-term rentals. So I saw this I think in Florida, short-term rentals had a ban, and I think they have a ban again right now. But they had a ban 2 to 3 months back at the peak of COVID, where there was this resort where they couldn't operate their vacation homes, which was about half their portfolio, but they could still operate their hotel in the same campus, just because it was classified as a hotel. So yeah, I mean, there's also mixed operators like that, and this is not like something new. They've been in existence for a while. So yeah.
I mean, you guys pull a lot of data
Mhm.
from all over the world. Have
Right.
you, and you've been in the space for about 5 or 6 years now, have you seen um, the pricing change significantly, or has the, like before when there was newer short-term rental operators, let's say 5 years ago,
Yeah.
were the prices higher than they are now? Or things like becoming more lean?
So I would say it has probably gone both. Like again, I'm giving an ambivalent answer here, but it's probably gone both ways. So we have seen uh, generally in cities that given that there's more and more supply, that so short-term vacation rentals have increased in cities, and hotels have also increased a little bit, maybe not as much. Uh, but then what has also happened is there are more people now who are open to staying in Airbnbs. So although there's more supply, there's also a little more demand. So it's not necessarily just been that, hey, there are more Airbnbs now and not enough people who want to stay there. There's on the host side, there used to be, like at one point way back, Airbnb was more of like, hey, I'll do this as a side thing. At which point people were okay charging not as much. Whereas now a lot of times Airbnbs are also professionally managed, which means they charge market value, right? So uh, earlier, like it's also gone the other way, where like a lot of people who were managing their Airbnb just as a side thing and would put whatever price I'm okay with having uh, a guest that I like, kind of a thing, versus now like most professionally managed ones will go and try and get the right market value for each property, right?
Right.
The bigger difference has been, again, like from purely our perspective, we also like to track a lot more of like how many people are doing something with the prices versus just not doing something with the prices, right? Like
Right.
in so many places, even now, I think even now the penetration of how many properties do anything about price, like not just setting one price throughout the year but changing it, it's less than 15%. I would say it's closer to 10%. Yeah.
So like we're moving co-hosted our management company. We're picking up master lease properties
Right.
in the Miami area. And like, we're coming from smaller markets,
Yeah.
we were in the Alexandria, Virginia. We were looking at some others. But like when we looked at Miami, it was like 10,000 plus rentals. It's like,
Right.
oh my goodness. But out of those 10,000
Yeah.
plus rentals, how many of those, like you said, are actually professionals that are changing their prices, using dynamic pricing,
Right.
and actually competing with the hotels? Because like you said, there's a lot of people that just go on there as a hobby, put up a property, like how most people start. But then
Right.
there's a smaller group that
Yeah.
are really trying to compete and trying to
Yeah.
take market share. How many people would you say are actually professionals or competitive with their pricing that the hotels would actually be like, okay, these guys are fierce competition?
So I think there are two different things here. One is there are there is a there's a pretty professionalized vacation rental industry in Florida. Like there are a lot of larger companies that have been doing this for a long time. That doesn't mean that they always do dynamic pricing, or they do. A lot of them might set seasonal rates every December for the next year and then just not touch it in some ways. There are also plenty of them that don't even set seasonal rates. They just set one single rate for the year and that's it. They're still supremely professional in how they manage guests and how the stays are, but not necessarily on the commercial aspects of it. And part of the reason is that a lot of this technology is pretty new, and a lot of companies have been doing this for 20 years, and things have been running fine. So they haven't necessarily seen the need to do it right away. On competing with hotels part, hotels would see anything that's good enough and cheaper than them as competition, right? So even if you're not savvy and you have set a cheap rate that's lower than hotels will be like, okay, this is aggressive pricing for us, like, because they're trying to undercut us, right? So uh, being professional and managing rates well doesn't necessarily mean that hotels treat you as a threat. They will treat you as a threat even if you're not doing anything, just selling things for much cheaper, right?
Mm.
Yeah.
And what would you say, what would you say is the percentage of, I don't know if you have this data available, but out of the people that are listing properties are actually utilizing like dynamic pricing? Um,
I would say my estimate for around the world would be around 10%, and um, that's excluding people who do smart pricing. I don't know how many people use smart pricing, but um, yeah, my guess would be, just by like we look at this data a lot for specific locations. So I haven't run this analysis for the entire world, but we have seen a lot of locations and tried to figure out, like, we have seen large cities where it seems like nobody's doing any dynamic pricing. And you're like,
right.
okay, like this is new. But then there are plenty of places, especially and when I say dynamic pricing, there are like multiple layers, right? There is, do you set seasonal rates 1 year out and then let them be? And then the next level is, do you actually go and change those rates frequently? Like we see the first one not happening. Like there are places where nobody is doing anything about rates, not even changing them by season or day of week or anything, which to us seems very, very like, okay, like there's clearly opportunity here if somebody wants to do well. But there are also like beach locations or ski locations who understand their area so well, like especially if they're property managers or vacation rental managers, that they will know exactly when their high season is, when school gets off during summer, and they will set rates and adjust them fairly frequently. So depending on like which location you look at, and I can actually pull this up if you want. to see in one of our market dashboards. Like I was looking at a report for DC, and very few people there seem to be doing dynamic pricing. Like if you look at the median rates and the 25th percentile rates, they're all pretty flat. And then I have another one for Orange Beach in Alabama, which is like a small beach town with a few condo buildings and timeshares and whatnot. And you look at the price trends there, and it's like, yeah, it seems like everybody knows the price trends, like, and demand trends there, and
Right.
they're doing their thing. So it's probably also like how new it is. Like in DC, probably a lot of people have been hosting for the last few years when Airbnb became popular enough. Whereas in Orange Beach, Alabama, that's like tourism is probably the biggest industry there. So everybody knows when high season is, when low season is, and they fluctuate prices based on that.
Yeah, we definitely want to be able to show that. For those of you that are listening on the podcast, definitely you can hop on over to the video, which will be available on Short Term Sage and also on YouTube. So Anurag will be showing his screen, but I also wanted to see like one question that I wanted to hit on was, who is dynamic pricing really for? Because you said that, is it for the person that doesn't know how to price their property, or is it for the person that just wants to be able to adjust the price based off of, let's say, I come into a new market, and the hotels have their price. Everybody else maybe that is in that market is setting their price. But how do I know that I can get the hotels probably know how to price their property, but I can't trust that everybody else is pricing their property correctly. So is dynamic pricing supposed to solve that, or is it just adjust the price that I set it to?
No, so dynamic pricing is supposed to solve that. What any dynamic pricing service, at least as of right now, won't do is try to match your rates to somebody else's rates. So just because nobody else has set rates that change by season, by day of week, and for holidays, that doesn't mean that your rates won't change. What most dynamic pricing services have been doing is they've been gathering data for Airbnbs or Verbos and short-term rentals over the years, not just price data, but also booking data, like to find out what times of the year are more occupied than others, whether weekends book more than weekdays. 6 months out, if a day is booked 20% already in your location, is that a normal thing? Or is it an abnormal thing where it might signal an event? So most dynamic pricing services will track all of this. So even if nobody else is doing any dynamic pricing in your area, dynamic pricing services will say, hey, it looks like in DC, there is something happening, and I'll show this example. Something is happening on next January 20th, for which a lot more people are booking. Not enough people have raised prices, but that doesn't mean that you shouldn't raise prices. We are seeing a lot more demand happening, and we are going to bump up your rates for that automatically. So it is the primary goal is to solve that problem, to be able to serve people who don't have enough information about an area or enough data, their own historical data, to be able to say what kind of trends exist. The secondary problem to solve is even if you have all your data, just implementing those strategies or pricing changes on an ongoing basis is a hassle. So how can that be made easier? So it's really the intersection of both, which ends up serving both ends of the spectrum. Like whether you know your market or you don't, you still need to execute your strategies, and that's helpful. And in both the cases, even if you know your market, there might be smaller events that you have never heard of that are driving prices up or demand up. And if that can be handled automatically, then why not? Yeah.
Hey, this is Julian, and I wanted to be able to give you our newest book, Airbnb Secrets Revealed, How to Build a Fortune on Airbnb Without Owning Property. In this book, we talk about the concepts of rental arbitrage investing, as well as co-hosting, and how you can build a business leveraging other people's properties. This book is perfect for the new short-term rental investor, and it's something that I wish that I had when I first started, as it would have saved me a lot of trouble and helped me to understand how to be able to leverage the power of short-term rental investing in your own real estate portfolio. If you'd like to get our newest book completely for free, go to shorttermsage.com/free book. Now, back to the show. So, there's, and this is probably, really relevant to, let's say, like we had a guest on the other week who is operating in Boise, Idaho. When he first got started, there was like 5 or so properties a few years ago, and now there's like 1,000+ properties. When he first got started, if everybody was listing their price at like, $60 a night.
Yeah.
It's like, and they were booking up, they were probably thinking, oh, well, I'm doing well.
Yeah.
But if a dynamic pricing, let's say he turned on his dynamic pricing, now it wants to, charge $120 a night. It's
Right.
like,
Yeah.
it's like that could be like intimidating to a person that's saying, like, everybody else is charging this. What gives me the reason why I can charge this amount?
Yeah, right. But if you can look in the market data that, hey, everybody else is fully booked a month out for the high season or this big event, and you're the only one left, or you're the one of the few only ones left, then I mean, you can get booked, and that's okay. Plenty of people have that reservation though, to say, hey, it's a 2-bedroom apartment, and I know the biggest event of the year is coming to my my town, but I don't feel good about charging $800 a night for Super Bowl, even though it's Super Bowl, because it's just a 1-bedroom apartment. And that's where I mentioned, like, you can create a lot of rules to say, hey, never let the price go above $500. Like, so you can set your, and there's more than just goodwill here, why people set high, like a max price to never go over. It's also that if you charge a lot, people might be willing to stay because there is no other option, but they might also leave a not so glowing review saying that, hey, yes, I didn't have anything to book, so I booked it, but it cost me a lot. So for long term, it might be okay to say, put a cap to say, okay, it's a 1-bed, even for high demand, I'm going to not go above this price. The opposite is also true. Like, so $60 might be what everybody's charging, but when low season comes around and the occupancy is only 20 or 30%, maybe you can go to 50 or 45 and get some bookings, enough to, like, maintain some activity through the low season. And again, you can set a floor there to say, hey, whatever happens, I never want to go below 45 during this season. And that way you're sort of protected from below, but then you're also getting the bookings you wouldn't otherwise get if you were purely copying other people's rates.
So with dynamic pricing, like let's say in that case with the Super Bowl, if a 1-bedroom automatically is just jumping up to $800 a night, let's say there's a bunch of people in that area though that have units. If your property's at $800 a night, is it looking at all the other properties in the area and saying, hey, all of these places are not $800 a night. Maybe they're like, $600 or $500, whatever. Is because the dynamic pricing is saying you could go up to 800, that means your property is going to get booked, or
not necessarily. So what we are saying is, so the way we look at it is, we say, okay, you're say 2 months out, and Super Bowl is a bad example because 2 months out you don't necessarily know which teams are playing and whether they'll be able to fly in or drive in and whatnot, right? But suppose that there's a big event happening, and 2 months out we see that, okay, generally 2 months out your area books at about 40%, and it eventually, during normal times, not during the current setup, during normal times, it's booked 40% 2 months out, and then slowly it goes up to, say, 80%. Now we look at a particular weekend and we say that, hey, it's booked 65% 2 months out, which tells us that, well, something must be going on for the occupancy to be higher already. And if it's already 65% booked, it means that it will slowly creep up and hit pretty close to 100%. And that's what I meant by pacing in some ways, right? So if it is going to hit pretty close to 100%, then that means that whoever has properties that are not sold at that point of time are going to sell for a lot of money, essentially. There is also the flip side of it, where, so this is a projection at this point. So 2 months out, we might say set it at 800, and then maybe it turns out that that 65% is climbing up and up and up much faster than we thought. In which case, it might say, hey, it looks like everything will get sold out 3 weeks out. In which case, like, really, at this point, you can really go up. But it's also possible that for whatever reason, it stays at 65%. More people aren't booking, and now you're 2 weeks in and still not booked. What we'll do automatically is we'll go in and start reducing rates to say, hey, at that point we thought it could sell for 800, but it's not been selling and the pace hasn't held, so we are going to drop the rate slowly. And then you can also create a lot of these rules to say, if it's not booked and if it's within X days out, drop the rates by this much and things like that. A lot of people also take a little more hands-on approach to say, okay, you're saying 800, but I've done my research and this is what this is the price I'm going to charge for this event, or this is the adjustment I'm going to make on your price. So people can do all of that stuff to say, okay, yes, a machine is in control, but as a human being, sometimes I know more than the machine does, and I'm going to sort of override it, which is fair as well. Like, it's something I've seen in airlines as well. Like, there are sophisticated algorithms doing their stuff, but there are also teams of like 100 human beings, analysts, who look at each market every day to say, okay, is there something the algorithm is missing that we can fine tune?
Right. So would dynamic pricing, because like there's companies that even like when they know that there's a Super Bowl going in an area or like an event, they'll like list the property, like a little pop-up hotel almost.
Yeah.
Does the dynamic pricing automatically know like increased inventory, and it'll just adjust it based off of that as well?
Yeah. So what happens here is, so it depends on where Super Bowl is happening. So I think the last, I don't know if it was the last one or not, but the one in Atlanta was pretty big, like in terms of people being able to fetch rates. What we track is occupancy, right? So we look at the area and say, hey, what kind of occupancy are we getting? Is it normal based on what happens in the area? Now, suppose 2 months out, I talked about instead of 40% occupancy being 65%. Suppose a lot of people opened up pop-up Airbnbs and made them available for the Super Bowl dates. Just because those pop-up ones are now available, the occupancy will not look 65% anymore. It will look much lower because there are now listings that are sitting open. Even if, and some of these listings will take booking from regular listings, right? Which will also drop the occupancy overall. So all of that automatically gets taken care of because we are generally, or everybody is generally tracking how occupied things are. And if it's Super Bowl where a ton of pop-ups have opened up to where for those dates there's not even a blip on the occupancy chart, then you're like, okay, I mean, doesn't seem like, yes, Super Bowl is coming, but doesn't seem like there is that imbalance between supply and demand, so we are not going to raise prices.
Got it. And are you guys just pulling from Airbnb, or are you pulling from like Verbo and all these other different OTAs as well?
Right. So we pull from Airbnb and Verbo. We haven't fully integrated the Verbo data into the product yet, but we pull from both of them.
So now we are, for those of you that are listening on podcast, we're going to be walking through this, but definitely recommend that you go on over to YouTube or our website, Short Term Sage, to this episode, and you can actually watch this live demo.
Right. Cool. So yeah, jumping right in. Once you create a Pricelabs account, you actually won't see any of this, right? Your account would be pretty empty in the beginning. Our main service is the dynamic pricing, where, like I was mentioning, we adjust prices up and down based on how the market is doing, in terms of occupancy, and your own settings and things like that. But we also launched this pretty cool tool called Market Dashboards, and those are free right now. So everybody gets 5 free reports, and these dashboards update every day till September 30th for free. So especially right now with a lot of things in flux, if you want to keep track of how your area is doing, how others are setting rates, this is a pretty nifty tool. What you can do is once you create an account, just head over to this page, Market Dashboards. You will not see any reports here in the beginning. What you can do is you can click these create new dashboards, and you can enter any address. So you can enter your address, you can enter somebody else's address as well. So if you want to track how things are happening somewhere else, city, zip code, country, and then you can put a radius. So let me just put in our office address here, and let me put in a 1 kilometer radius. It'll show you what area you're going to look at. And then when you click next, it'll show you how many listings are there, how many Airbnb listings exist in that area. So when we do that, you have the option to go back and say, hey, that's too many listings, I want to track a smaller area, or that's too few listings and I want to track a bigger area, for example. So when you do any of that stuff, so in this case, it's come back with 337 listings, which is just about right. Like, that's enough listings to get meaningful trends. You can give a name, and then you can choose which currency you want the numbers to be in, and hit generate report. I'm going to look at one of the reports that I've already created, one of the dashboards. It takes about like a couple of minutes to create one. And this one is for DC area, and I picked Capitol Hill just as a random address because I didn't know anything better. But yeah, it shows you what kind of different units there are. So for example, it'll show 1 bedrooms in blue, and this will change depending on your report. 3 bedrooms. I've also filtered this to 1 to 3 bedrooms. I think there are homes that are larger as well. But you'll see for each home, like what's the average price that they are listed at over the next 60 days, and things like that. The most interesting, the most actionable things that I find are on the next 4 charts. The first one is future looking. So it tracks what kind of occupancy are different dates getting in the future. So
Right.
the blue line here is showing you occupancy. So for example, DC, today is July 7th, it's saying July 8th, July 7th, they're booked around 40%, which is pretty low, right? The more interesting thing is it also shows in the last 30 days what dates have gotten booked more than others. So 18%, so 17% of the listings on July 16th got booked in the last 30 days, which is useful to know. And then also shows cancellations. So for example, one of the things you can see here is August 27th. It seems like occupancy is peaking. A lot of these bookings have come in the last 30 days. And this is March on Washington. So it seems like March on Washington is going to see a ton of demand. And because of that, I see, so the bottom chart here is prices. So the middle one is median price. The green one is 75th percentile. Some people are doing something about it. So it's not enough. For the inauguration dates here, occupancy is already up. So like 10% of the folks have already, 10% of the listings are already booked that far out, which is pretty, like if you look at dates around it, very few, like 2 to 3% occupancy that far. And for this one, people actually have some people have gone ahead and bumped their rates because people know about this event a lot more than March on Washington probably.
So one of the things that we started using with this tool, because a lot of our listeners are also, investors. And if you're trying to see particular properties and how they're doing. So like you said, right now it's viewing for 1 to 3 bedrooms, but you can get very specific and get, say, all the 2 bedrooms, what's their occupancy and what's their price.
Right, exactly. So I can go ahead and say, okay, I only want to look at 2 bedrooms, for example. And then
this is pulling just data from all the data from Airbnb, not specifically just Pricelabs users.
Correct. Yeah, this is pulling from whatever location you have chosen, whatever radius you have chosen, all the listings on Airbnb in that area. Yeah, it's selecting all of that. So now it's going to look at only 2 bedrooms, and you'll see that this hump actually seems like it became much higher, right? It used to be 40%, and now for 2 bedrooms, it's much, much higher, which means 2 bedrooms are more in demand than others for those dates. Yeah, and then you can also go back a little bit to see, okay, how have things been trending? So it looks like DC is generally on an upward trend, which seems normal for the times. And you can also see how dates have been booking, right? So,
and how do you guys? So that was a couple questions that I had. Was the 75th percentile? Like, how do you classify someone as being in the 50th, 75th percentile?
Right. So we are not classifying properties as being in the 75th percentile or 50th percentile. We are looking at the prices and saying there are this many. So for let me go back to the summary chart so I can see how many 2 bedrooms are there in the area. So there are 223 2-bedroom listings in this area. And what we'll do is for every day, we'll line up their prices to say, okay, what's the 223 would mean, I think 112 would be the median point. If you sort all the prices in order, what's the price of the 112th property? And then 75th percentile would be, again, 170 something similarly. So we don't look at a property and classify it as low, high, medium, but we say, what's the price? We are just looking at price as a signal here.
So 75th percentile for the 223 means that there is just what does that mean as far as how many properties are charging that amount?
Right. So let me do a quick calculation. 0.75 by 220, into 223. So it means that 167 properties are charging, so 292 is the 75th percentile price for August 18th. So 167 properties are charging below that, and the remaining top properties are charging above that.
Got it. So you can safely assume that the 223 minus that 0.75,
Yeah.
that's how many properties are able to be above that
price.
That price.
Correct.
So
yeah.
if you're saying, basically you're saying that 75th percentile is kind of like the top performers, or the more higher end properties.
Higher end properties. So they might or might not be top performers, right? They might just be 2 bedrooms with a balcony, or 2 bedrooms that are fancier in a fancier building, that maybe they don't get booked. You don't know that, but you know that they are priced at that.
That'd be some interesting data to be able to actually see the occupancy rate of those particular properties.
Yeah, that's a good thought. This is something new that we are working on improving. So yeah, I can try to see if that can be done.
I'll take my my commission after.
Yeah. So but talking about actionable stuff, like the other thing that we see a lot of people falter on is minimum stay strategies. For example, generally, so let me go on that note on the LOS and lead time chart. What these do is they're looking at all the bookings made in the last month, and then they say, can we classify those into buckets of how long these reservations are? So suppose you run a 1-night minimum stay for every single day of the year. What could happen is during this March on Washington, when everybody is booking, you might get a 1-night booking from somebody who's coming there just for 1 night, participating, and then leaving, right? And you would be pretty happy because it's an expensive booking that came through if you have raised your prices. But what's happened is now you got a booking so that anybody who was coming for the same event but would have stayed for 4 nights and paid that higher price for all 4 nights is not going to be able to book your stay. And very few people would want to book the first half or the last half. Like once you have that 1 night in the middle, it's harder to book, or it gets harder to book the other 2. So one of the more really important things here is to say, okay, it seems like there's an event, but more importantly, the biggest chunk of bookings that are coming are not 1 or 2 night stays. They are 3 to 7 night stays. So I should go ahead and increase my minimum stay to try and get those.
Got it. So,
bookings.
And you can do that in Pricelabs, saying on this particular date, I only want people based off of the data that I'm looking at to do a 3 to 7, because like you said, it wouldn't make sense to only have someone that books for 1 day during that time when I could be making so much more if I do an extended period.
Exactly. So, I mean, if I were to jump into that, I'm going to pull up a Chicago property because that's what I'm familiar with. But Chicago is holding its marathon, which hasn't been canceled yet, in October. And so for October, you'll see that our price recommendations, compared to other weekends in October, our price recommendations here are much higher. Now you can come here and say, for these dates, I want a minimum stay of 4 nights. I know there are people who come from far away for these marathons, and they're not going to just stay for 1 night or 2 nights and go back. I can do that. More importantly, for a lot of our larger customers, you don't have to go into each property and do this. You can come here to your customizations and say, for all my Chicago 2-bedroom apartments, I want to go in and say, have my minimum stay for that weekend to be 4 nights. So that way, like, this is what I meant by, like, even if you're a property manager who knows their area, sometimes putting in minimum stay of 4 nights for those dates for 100 properties is quite a hassle. Whereas like what we enable is like, okay, you can just create a group and say every property in this group gets this new setting. So,
do you guys have a way that you guys can even identify that there's a period of time in the future? Because some people are like a lot more quicker than I am. Like if someone knows like there's an event going on, like, like I don't know, I don't personally know about like the march on this March on Washington. But somebody else might, and they might be trying to find these properties way in advance. And maybe one of my properties is listed before I can even change that. Do you guys adjust that based off of the data, or?
So we adjust price, at least right now, we will adjust the prices based on the data, but we don't adjust your minimum stays. Minimum stays are a little more rule based, where you enter something. You can also set some fairly clever rules. So, for example, a lot of our customers would do this. They would say, I want a minimum stay of 2 nights on weekdays and 3 nights on weekends. But, and again, I'll show this, go back to this chart. One of the things we see is in the bottom chart, the x-axis is lead time. So on the right is stays that are happening far out, and on the left are stays that happen last minute. We generally see this trend happen. Like far out, very few people are booking short 1 or 2 night stays. But as it gets closer, last minute, within the last week or same day, a lot more people book like these short 1 night bookings or 2 night bookings. So what we, some of the rules that you can set up are essentially to say, okay, I want a minimum stay of, say, 2 nights by default, or both for weekends and weekdays. But then you can say, if it is within the last week and if it's still not sold, drop it to 1 night. And then on the flip side, say, if it is more than a month out, let's try to only fill up using 3 night bookings. And if it's more than like 4 months out, let's only really try to get 5 nights or longer. And then the cleverest, in my opinion at least, is when you have a gap between 2 bookings and your minimum stay is higher, you can automatically reduce the minimum stay. So we don't say that, hey, there's a big event coming up and you should do this. But if you have these rules set up, they will automatically make sure that if somebody is booking more than 4 months out, I don't want to clutter my calendar with short bookings. Let me try and get only long bookings. And as the date gets closer, we'll keep reducing your minimum stay from 5 to 3 to 1, from 2 to 1, so that more bookings become possible to fill up the gaps left in your calendar.
Wow, this is a pretty powerful customization. What we have to name this now? What are we naming this setup? This strategy.
So this is called it's called a minimum stay customization, but this is called cascading minimum stay. Like you're setting minimum stays to slowly drop.
Got it. Cascading minimum stay setup.
Yeah.
And that's something that do all the dynamic pricing tools allow this, or is this something that's kind of unique to Pricelabs?
So it was unique to Pricelabs for 2 years. I think we started doing this back in 2018. I think now, depending on which PMS you use, I think both Beyond Pricing and Wheelhouse might also have it. But yeah, we do this with 40 plus PMSs, property management systems right now. And yeah, we've been doing this for a long time.
Wow, that is pretty cool. Awesome. Going back to the occupancy, that was one of the things that confused me a little bit, was looking at the occupancy percentage versus the occupied nights. Can you kind of explain the difference between those two?
So the top chart is by stay date, right? Like it's looking at future stay dates and saying, on this day, if there's a booking, how long is it? So this is pretty straightforward. The length of stay versus lead time is essentially saying, lead time is essentially how far out do people book. So if I book a stay today for a stay in the end of July, say 27th of July, then my lead time is 20 nights. So that booking would fall in this column, right? And if that booking that I made was 7 nights long, then it's going to show up in the orange section. And if it was 2 nights long, it will show up in the green section.
Right.
Now, this chart essentially tells you that in DC, a ton of people are booking super last minute, which is pretty normal for cities. Like in most cities that we look at, this is pretty common. If you look at beach locations, you would see that there is a hump here where a lot more people, especially when they are planning a beach getaway with their family or extended family, they would book something which is like they would not make a last minute decision to go with their family. They would book 2 weeks out or 2 months out. So this kind of gives you an idea of, in this location, when do people book? Now, this chart, percentage, is essentially looking at this chart, but saying, expanding this all the way to the top, so it's easier to see trends. So just by looking at this one, it's hard for me to say what portion of all the bookings that are made far out are 2 night bookings, or what portion of bookings made here are 2 night bookings. Whereas in this one, it's very easy to say how this portion of 2 night bookings stays pretty steady and then starts increasing. So you can kind of say till more than 8 days out, if I have a minimum stay of 3 nights, I'm only losing out on sort of 11% or 10, 13% of my demand, not too much. And in return, I'm getting the chances of longer bookings. So if I were to set a customization, I would say, hey, more than a week out, I don't want to take 2-night stays because not many people seem to be booking 2-night stays farther out. But within 7 nights, if you haven't reduced your 2-night stay, your minimum stay to less than 2 nights, you're losing out on more than half the reservations that happen in the market. So this chart is super important to figure out how to set those cascading minimum stays. And this chart is more important to figure out, like, to not panic if 30 days out you're not as booked, knowing that, okay, a chunk of bookings come within the last 30 days.
And did you want to go over the remaining charts, or did you want to show what does a recovering market look like? Because I know that was one of the things that you guys were providing was market recovery.
Right. Yeah. So I can quickly go into another dashboard. So this one was DC, which is a city, and most cities we are seeing are recovering much slower than destination rentals. Like if you're in the mountains or on the beach where it's a little more isolated, although not as much as we would all want to see. So for example, here what I've pulled up is another report for Orange Beach. Both these, Orange Beach, like July and August is like the busiest time there. And we are seeing occupancy that's going up till 73%, which is pretty good to see. But I mean, July and August, these places get a lot more. But compared to DC, which is a city, and I've seen Chicago as well. Chicago downtown is running at 30% or something like that. So compared to all of that, it does seem like a lot more seem to be happening here. And this also shows something very, very useful. Like, remember how in DC, not many people were setting any seasonal rates. In Orange Beach, it seems like a lot of people know their market. They are setting seasonal rates where prices drop during winter and then pick back up for spring break and then stay up and then go back further up for summer and stuff like that.
So looking at the DC one, you can actually see that it's pretty flat throughout the year.
Exactly. Yeah. So if you look at the future-looking chart in DC, so granted, most cities don't have that much seasonality. So other than a few big events here and there, this line is pretty flat. Whereas in Orange Beach, like, people know that, okay, come August, you should start reducing your rates with hurricane season coming and whatnot, and then bring them back up when spring break starts, when high season is starting again. So and that might also be like DC in normal times has a pretty steady stream of tourists, right? Not just tourists, also business travelers or government travelers. Whereas Orange Beach during dead season doesn't really get enough. So people know, like, yeah, the shift is so drastic that they know that they should change prices. Whereas in DC, it's a lot more subtle.
And how can looking at the occupancy and the price determine if the market is recovered? Because I know that you have another a tool that you provided, but it was just showing like the states as a whole.
Right.
And this tool, because we can go into particular markets a lot more micro,
Right.
can this actually show a recovery at a better scale?
Yes. So what generally there are two parts to it, right? In whether a market is recovering or not. One is, how is the overall occupancy looking? So if the overall occupancy is fairly healthy, then you know that, okay, yeah, this is good. You can also go back here and see, has it been increasing, for example? But more important is, even if it is not as high, are new bookings coming in? Like, if this line was not as high, but a ton of new bookings were coming in the last month, I would know that people are beginning to feel better about this location, that they are booking more and more. And then the last one is cancellations, which is equally important. Like, I have seen locations, let me see if I can find something here. I've seen locations where number of cancellations was greater than number of new bookings coming in. And that kind of tells you that, okay, like, the sentiment is pretty down in this location for guests to come in, if more cancellations are coming in the last 30 days than new bookings. So those three numbers, like just the overall occupancy, if the overall occupancy is 90%, it hardly matters if you're getting new bookings or not. It seems like it's been booked for a while now. If it is down to 30%, that's also pretty bad. If it's somewhere in between, what's important to look at is like how are cancellations happening and how are new bookings happening. Like if a ton of new bookings are coming in, it might mean that it's on its way up, versus if a lot of cancellations are coming in, other way around.
And with the occupancy, because the occupancy is showing, let's say, like in this example, it's around that 30, 30%. But how do we know if those are just like really poor performing properties, or like properties that aren't priced right versus properties that are maybe priced for being able to get the bookings up towards a higher occupancy?
Right. So that's not something we have built into this just yet. Where, I mean, what you're kind of suggesting is there should be another filtering capability here to say, I only want to see like the top 25% high performing properties. Like, what are they doing?
Right. Because
Or,
looking at this is like everybody that is in this market,
right.
but us being professionals, it's like we're going to try to shoot for a higher. Maybe that means we're using dynamic pricing and lowering our price. What's that price point that we have to hit in order to get to that more 75% occupancy rate?
Absolutely. No, that's a good point. You're giving way too many ideas here.
Oh, thank you. Pay me later.
Yeah, I'll write those down.
Awesome. Okay. Is there anything else that you wanted to, you want people to take away from this tool?
So one thing that we have generally been seeing during this period happen is, especially during March and April, there was a big shift towards longer bookings, longer stays. And we are seeing generally that's coming back down to normal, to where it used to be. That said, it's still, if you're a host right now, and you're running low occupancies, there are a few things you can do, right? Like if you're running a 30% occupancy, for example, like it seems like a lot of people must be for this to be here. You can, one, either play with price and try to be a top performer property. You could also say, hey, 30%, if my projection is that out of the next month, I'm going to book 10 days out of 30, maybe there is some point to giving a deeper sort of weekly or monthly discount, to say, if I can give a deep, so I'm looking at monthly discounts here in this tab called policies and fees. It looks like 35% of the properties on Airbnb don't give a monthly discount. And if your occupancy is running on average at 30%, to us, that almost doesn't make sense. When you get a 30-night booking, you're sort of de-risking everything. You're guaranteeing 30 book nights. And it's okay if they come at a cheaper rate. If your occupancy is going to be 30%, you can give a 40% discount and still make more money from that booking than by waiting for those 10 short nights to book. And we can, like on this tab, we can really see that. Like there are two colors on each of these charts. It's saying 35% of the listings have zero monthly discount. And it's saying of all the monthly bookings that happen, month-long bookings that happen, only 10% happen on such listings. Whereas if you have a 40% discount, only 5% of the properties have a discount of 36 to 40%, but they are getting 10% of the long booking. So you're 2 times more likely to get long bookings if you go with a deeper discount.
So this chart shows you exactly how many properties are not including those booking discounts,
right,
and how many people are actually booking because of the discounts.
Right. Now, granted, the starting price itself matters, right? So clearly some people are booking long stays even though there's no discount, because maybe the nightly rate was cheap enough. But the chances, it's from our perspective, even without looking at this, I would say if 30% is your occupancy, you should be okay giving a 50% discount and taking a long booking. One, it's lesser hassle. Two, it's giving you more money than you would otherwise expect to get. And yeah, it's just lower risk. You are assured that you'll get that money instead of not knowing whether there will be those 10 bookings or not in some ways.
It's almost kind of crazy to think that there's people like looking at this now. It makes sense. But there's a lot of operators out there that aren't using dynamic pricing, that don't know that if they simply just gave a discount, that they would be able to profit. Like we've seen a lot of people
Yeah.
And I'm not saying that, not trying to say anything bad about anybody, but we've seen a lot of people leaving this space because they haven't been able to keep their properties occupied. But, from what it looks like, it's like if you look into your maybe particular market, like in this case, the DC market,
Right.
if you just give a nice discount, you'd be able to take the majority of the bookings that are looking for that discount.
Right. And again, like you have to set your limits, right? Like maybe there is a price point that you're never okay going below. But know that price point, and then especially when times like these, when demand is super low, especially in urban areas, if I mean, try playing around with all the levers that you have to get that right booking.
Awesome. Is there any particular charts or information that you feel that would really benefit people right now?
No, I mean, on this one, cleaning fee, I mean, right now it is a hot topic as well, right? Like you want to know uh, what kind of cleaning fee people are charging, and it seems like, especially in the DC area, like it's a pretty standard, somewhere between 50 and actually some people are going as high as like 30% of the properties have 100 to 130 bucks cleaning fee, which is once you start going much higher than that, then the portion of bookings, a lot of people might be getting turned off by like, hey, there's a 200 bucks cleaning fee, like 4% of the listings seem to be charging that,
Right.
and they only get half the bookings, which means
which is pretty interesting too, because then you can look at this and you could say, you might think that you're getting a lot of people staying with you because you have a low cleaning fee, but like that 53 to $78 range
right.
is pretty on point, the same as the $79 to $104. So you could potentially be charging more money for your cleaning fee and still get the same amount of bookings. Is that what that's saying?
I would read it slightly differently. I would say if your cleaning fee, and again, like generally we say cleaning fee should be what it costs you, right? It
Right.
shouldn't be like a pricing lever in some ways. But this one is saying 14% of the listings have a cleaning fee between 50 and 78 bucks, but they are getting 26% of the bookings, which is disproportionate. Like they are twice as likely to get booked as if you were in some of these other ranges where like there are more listings. There are 30% listings that charge a higher cleaning fee of 100 bucks, but they only get 22% of the bookings. So I mean, if my actual cost is in this range, I would put that as a cleaning fee, saying so this one is actually indicating that when people see a very high cleaning fee, they are getting turned off by it and not booking. Whereas when they see cleaning fee in this range, they are generally okay with it. Like they seem to be okay with it and booking disproportionately higher.
So you're saying in this case, it's not necessary to maybe raise, because what some people do is they'll maybe like lower their cleaning fee and raise their price, or they might raise their price, lower their cleaning fee, and just try to play that. But what you're in this scenario, it's kind of saying you can have a lower cleaning fee with a higher price, and that might actually do better than a higher cleaning fee with a lower price.
I think that connection is not clear here, and it's not easy to make that connection because I guess you're now saying that there should be another chart that shows the total paid amount, right? Like what we don't know is the properties that are charging a lower cleaning fee, are they having a higher nightly rate? Like in this chart, it's not clear, right? So so that one is hard to say just by looking at this chart. What I was trying to say was more of like, okay, every other aspect aside, people who are charging 50 to 80 bucks cleaning fee seem to be getting disproportionately more bookings.
Got it.
Yeah. Although,
awesome.
Yeah, that's a good idea.
I should just become a data scientist. That's what I should be doing. Well, awesome. I this has been going on a little bit longer than what most of our podcast episodes do, but I guess this is turning more into like a webinar almost.
Yeah. I think we're an hour and a half in almost, right?
Yeah. But for those of you that stuck around, I hope you guys got a lot of value from this. We'll include links down below in the description, as well as on the show notes page to be able to go check out Pricelabs. Pricelabs, amazing tool. Really love the data and the resources. Do you have anything else that you like to to share? Kind of maybe what's happening next, or any amazing cool projects you guys are working on?
No, we have generally been fairly busy developing these reports, improving our main dynamic pricing product itself, right? Like that's seen a lot of change in the last 6 months. Generally been fairly busy time for us, but yeah, some cool new things coming up in the next few months as well. If you can join our mailing list, if you go to our blog, you can join our mailing list, so you'll get all the updates. But if any questions come up when you order these reports, again, five of these reports are free till September 30th of this year. So go wild, explore data, figure out how to improve things. But if any questions come up, just we are very, very responsive at support@pricelabs.co. So you can email us and you'll hear back pretty quickly.
Awesome. Well, thank you so much for taking the time, Anurag, and we'll definitely excited to see where Pricelabs is going, and maybe have you on in the future when you are building this stuff out as well.
Sounds good. Thank you so much, Julian. This was a pretty interesting. I mean, the questions that you came up with were very, very interesting. It was good fun answering those.
Yeah. This is a unique audience. We're very we're technical. We want to know these types of things, and that's what a lot of the listeners enjoy.
Exactly. Like the answers I was giving were not obvious answers to me. I had to really think about, okay, how would this work with that? And is this painting the true picture or not, and things like that. So yeah, it was pretty fun. Good awesome. Fun for me.
And when you put the new features in, you could maybe drop my little name right there, with collaboration with Julian Sage or something.
Yeah,
I'm just joking. But appreciate you taking the time. Until next time, Host Nation, keep on hosting. Hope you hosts benefited from the show. If you found value, please go on over to iTunes, leave us a review, and let us know what you enjoy about the show. If you'd like to talk to hosts that have been featured in these episodes as well as the community, go on over to our Facebook group, The Host Nation.